Crypto. All the crypto news in one place.
Now we're taking a look. 100 billion wiped out from the crypto market cap in the past 12 hours. This is from yesterday, and we saw a massive amount of liquidations taking place. Over 875 million in the past 24 hours. 786 million going long, 89 million going short. A lot of whipsaw action here lately in the crypto markets, wiping out the shorts, wiping out the longs. A lot of people getting wiped out using that leverage, and so you got to stay safe with it. And so what happened here is that we were anticipating the market to rally up a little bit further than it did last week.
I think what the interesting part was, it was exactly when gold pumped. So as gold moved up, Bitcoin dropped literally at exactly the same time. So supporting once again that Bitcoin is now priced in gold, in my opinion. So that's what I think happened. When gold moves up, Bitcoin goes down. I've been analyzing that the last few weeks. If you look at the Bitcoin gold chart, I think you get a much better picture of what's really going on. And I think that's what happened. But obviously, we've been accumulating since November 21st. And so a lot of longs have accumulated, with $500 million of longs were liquidated in that move.
Let's continue. In terms of whales, the selling pressure from whales for Bitcoin is going down a little bit. The whales have been adding a lot of Bitcoin, or sending a lot of Bitcoin to Binance. And that has been causing the price to go down, of course. But at least for now, the peaks we saw in November, the whales are relaxing a little bit in terms of selling Bitcoin. So that's very important to keep note of. Also, institutional demand for Bitcoin remains strong. US custody wallets typically hold 100 to 1,000 Bitcoin each, excluding exchanges and miners. That gives a rough read on institutional demand, Ethereum holdings included. So 577,000 Bitcoin was added, and it's still flowing in. So the demand is still big. It's just that the selling pressure from the whales have been equalizing out the demand. And also, if you look at the Bitcoin holder realized losses for a 30-day period, you can see that.
Now back into it. This is what we've seen over the last week. Okay, they've added $10 million into their corporate treasury in the form of Bitcoin. This is continuing the push of crypto after 8 months of accepting Bitcoin payments at its US locations. Okay, claiming to be from this statement. Okay, it's a self-reinforcing cycle. You pay in Bitcoin, sales rise, and all crypto revenue flows in what it's called the SBR. It's SBR $.03827. Okay, so those funds in turn will help bankroll upgrades, better ingredients to restaurant remodels without having to raise menu prices. Okay, so essentially, it's almost like an appreciating.
Let me paint you a picture of what 2025 actually produced. Because if you think this is about market cycles, you are lying to yourself. In 2025 alone, 11.6 million crypto projects failed. Yeah, 11.6 million. More projects died last year than were created in the entire history of crypto before it. That is not a correction. That is an extinction event. And what did we produce with all that capital? What was the innovation? Fiatcoin. A Solana meme coin that hit a market cap of over $2.1 billion. We had AI agent tokens with 0 users hitting valuations of $2 billion. And then 99% of them went to zero. The industry's innovation became gambling on jokes. It became a casino where the house didn't just win.
So here it is. Today, the New York Stock Exchange is proud to announce the development of a platform for trading and on-chain settlement of tokenized securities. The New York Stock Exchange's new digital platform will enable tokenized trading experiences, including 24/7 operations, instant settlement, orders size and dollar amounts, and stablecoin-based funding. That's an important bit right there. We'll get to that in a second. Its design combines the New York Stock Exchange's cutting-edge pillar matching engine with blockchain-based post-trade settlements. Blockchain-based post-trade settlements. All right. And so Smoke did highlight this, NYSE plus BNY Mellon plus Ripple. And it says the launch of New York City Stock Exchange tokenized securities platform is one of the component of ICE's broader digital strategy, which includes preparing its clearing infrastructure to support 24/7 trading.
So in this clip, Charles is criticizing the Clarity Act, saying that it was effectively written by Liz Warren. And you know what? Liz Warren is part of the anti-crypto army. She was part of the same group of people that accepted money and was friends from the FTX group while attacking legitimate actors. Coinbase, Kraken, Library, Ripple, you name it. And in the clip, Charles is kind of going after Brad Garlinghouse, and people are not really understanding what he's saying. Brad Garlinghouse likes the way that the current bill is because they just want to get it done, okay? But the current bill is bad for retail. It's bad for builders. It's good for the institutions. It's good for people that are accredited investors, but it's not good for retail. It's not good for the same group of people that made Bitcoin and crypto great. And you know, it's a fair criticism. I don't have an issue with it.
Which means that we should see the Clarity Act crypto market structure bill also passing sometime this year as well. Now we do have an update with the Ripple versus SEC case. We had the Democrats sending a letter saying that we have Trump and his administration dropping 12 plus crypto cases for absolutely no reason and being paid off to do so. Now, they include the Ripple versus SEC case as well, even though the Ripple versus SEC case has gone out for 5+ years. But luckily for us, the SEC versus Ripple case cannot be reopened again. We have from legal expert Bill Morgan saying the SEC versus Ripple case is legally closed for good, citing res judicata as a hard legal barrier despite renewed scrutiny of dropped crypto cases by the U.S. Securities and Exchange Commission. So guys, again, it is officially over. XRP is not a security. Ripple has won the battle.
Here's where we stand with the Clarity Act today, which, as we know, is the biggest piece of crypto legislation in history. It will define clear rules for crypto to thrive in America for the first time ever.
The Clarity Act passing would be like a starter's gun for ETH and SOL to run into trillions of dollars of value.
Is now in complete disarray as the stablecoin yield fight threatens to sink the Clarity Act as Coinbase and the White House clash. As you know, Brian Armstrong, CEO of Coinbase, has pulled his support for the current draft.
I think the really pivotal moment was when Coinbase CEO Brian Armstrong, as you noted, pulled his support very publicly from the bill. And that sort of, it still took a little bit more time for the committee to make it official, but they have said they're going to postpone it.
Now we do have Coinbase CEO Brian Armstrong arriving in Davos for the WEF event. And we do have 3 main goals for this week, and that is talk to world leaders about economic freedom and how crypto can update their financial system. So we will see this event talking about cryptocurrencies, very, very bullish. We have continued the push for market structure legislation, which we had Coinbase CEO himself, just one person, delaying the crypto market structure bill, even though that shouldn't have happened. So how can one man, right, cause this much damage to the crypto space? And we have keep pushing for tokenization to democratize access to capital markets. The future of finance is here, and this time it's built for the people.
And this was interesting. Ripple presence has appeared at the World Economic Forum as Davos kicks off tomorrow in Switzerland. We knew that Ripple is going to be there, but it's one of the sponsors here of the USA House at Davos 2026. So, you know, there's also Hedera here and Ripple. So this is very interesting. You know, the same prospect as Qualcomm and Microsoft and C3 AI and Pfizer and McKinsey company, right? So Ripple here is with you know, some very nice names here, right? You know, on the sponsorship here. So we'll see what kind of noise does Ripple and XRP make in Davos this week. It is a very, very interesting.
Openly modeling alien disclosure as a systemic risk. That's a system admitting it has no margin for error left. And here's the irony. The same analysts that say aliens could collapse trust in governments also admit that people might flee into assets that don't rely on governments at all. Digital, neutral, scarce. We got some absolutely insane stuff to get to today, so strap in. That's right. Send it! All right, here we go. First story of the day, and I need you to understand this is not a skit. This is not the legend Alex Jones. This is a major newspaper reporting that the Bank of England has been urged to plan for a financial crisis if the United States confirms alien life. Yes, aliens. And here's the direct quote. The Bank of England must plan for a financial crisis being triggered by an official announcement confirming the existence of alien life. So, who the hell is saying this? A woman named Helen McCaw. She served as a senior analyst in financial security at the Bank of England. And she wrote directly to Andrew Bailey, the governor of the Bank of England, telling him, "You need contingencies. You need a plan, because if the White House ever confirms we're not alone, it could trigger economic collapse." And she uses this term, and it sounds academic, but it's actually terrifying. Ontological shock. That's the moment where the public realizes.
Anyway, Kabiza Letter shared this. The breakdown of the Trump playbook. Friday night, as always, particularly on a long weekend, Friday night, launch your crazy. Okay, tweet some crazy shit out. Let the market start to absorb the new reality. Okay, then announce the large tariffs. Then double down with more threats. Send out some memes. Oh boy. Then of course he responses. Europe's responded over the weekend. All that kind of stuff. Keep applying public pressure. Investors start to freak out. Tariffs don't go live, markets can have a bounce. By Wednesday, same week, dip buyers step in, spark relief rally, move off and fades, leaves another push lower. Typically, smart money begins buying. If the stock markets roll over like this, by the way, during this week, which futures are showing that the markets do not like the Greenland shenanigans, okay?
I just wanted to say before we get into that, Andreas, the positive reading here is I would rather be hit with a tariff than with a cruise missile. That's the silver lining here. We're not talking about war anymore. I know it's not off the table, but we're not talking about invading Europe or whatever. We're talking about a trade war, which is much, much better than an actual war. Nonetheless, Andreas, a broad tariff on 10% on various European countries, which in essence means the European Union, to be raised to 25% along the way. How serious is this for global markets if it becomes a reality?
Yes, so let me start by saying that even if I agree with you that a tariff war is obviously better than an outright war, I don't really think anyone dared to even think.
Federal Reserve is about to inject $55.3 billion into the system over the next 3 weeks, one of the largest liquidity injections in U.S. history. At the same time, the average price of ground beef just hit a record $6.67 a pound, up 72% since 2020. Chicken up, coffee up, sugar, snacks, oils, all up. Food inflation is crushing people, but don't worry, the system is fine. Gold just hit a new all-time high. Bitcoin's back under 93K. And somewhere, Peter Schiff is doing this, probably victory lapping on CNBC as we speak. So tell me, is it over? Or have we only just begun? Because when central banks are printing like it's 2008, when food prices are screaming recession, when gold is signaling fear, and when global financial institutions are, well, openly modeling.
Now, the predictive cycles looking out for 2026 for the S&P 500, midterm years, is a pretty rocky first half of 2026. The purple line are your midterm years, has all of the data here going back to the last 100 years, 1926. That is what each of those years in a composite put together looks like. The first 3 to 4 months, pretty much grinding with a lot of corrections along the way, then a larger correction into June, and then things start to consolidate before a stronger end to the year. That next part is also going to be quite tricky. If you get this nice double bottom, you need to see the market move away. And for the S&P 500, it's what we've been tracking now for the last year, or coming up.
That's essentially what this theory is about. Let me know, guys, if you believe that this is going to happen or not. And if you also want me to do more of a deep dive into this exact thing, I gave you the break points here. I gave you the most important things. Empire 250 years. US is inside of the 250 year right now. And usually the financial order collapses together with the empire, which is going to lead into the USD collapsing and then assets going up. So keep that in mind. Also, the US debt is crazy right now. If you look at the amount of debt and the interest payments happening, this also points into the direction of a potential collapse here moving forward. And especially with all of the politics, everything that's happening right now in front of our eyes, this is definitely something to keep our eyes on. Also, the Japan 40-year bond just hit 4% for the first time ever. This shows us that investors are not really believing in these governments actually sticking around for much longer, because the higher the yields goes for these, the interest rate yields on these government bonds, the higher they go, it essentially shows us that people are not trusting the government anymore, that they are going to repay these bonds.
That's what's going on right now. 2024, 2026 is just like 2021 November. Are we in a similar situation where we are on the cusp of the mega bull where we go to $280,000 Bitcoin? Or we're on the cusp of the mega bear and you are not bearish enough and it's going to literally zero this time because the stocks are basically at all-time highs. And the second those things start having a real correction, with crypto being as screwed as it is already, we're going to Goblin Town, guys. One-way ticket. Here's the daily chart for Bitcoin. Let's keep it simple, okay? Look at this. So this is our uptrend. 1, 2, 3, 4. Okay? Higher high, higher low, higher high, higher low. We'd be aiming then for the next higher high, which come in around the 200-day EMA, around $100,000. That would be the ideal plan here, wouldn't it? Will that be what plays out? Time remains to show it. But so far, I would like to point out that on this daily chart, which we still have 12 hours to close, we did see right in here buyers step in to defend the 20 and 50-day EMAs. A move down to touch this orange line would probably be scary for a lot of you, but would be totally cool and normal. It's just be the third touch on the trend line.
I've ever seen it on a major time frame really explode and go big. What's going to happen? Only time will tell. Do I know? No. I know nothing but the fact of my own ignorance. But we are going to see, and we're going to break it down no matter what. We see this big resistance here. We see this resistance here. Okay? What you have to know is right there, that's support, because you came up and you couldn't, you broke back above it. And this is support here where these two candles have touched. So you got support at 87,000. Like on the monthly, really, that's the last, you break below 87K. This doesn't become a tweezer bottom anymore. And this changes. I mean, that you're cooked. Okay? Another thing that is clearly looking interesting to me is like, I've got I feel there's like a 60% chance that this is just going to make a right shoulder and dump on us.
Now, usually where this bottoms, right? Where does it normally bottom? If you look at the percentage of supply in profit, historically it has bottomed somewhere between around, let's call it 36% up to about 45%. So let's just call it somewhere between, say, 35 to 45% has historically been where the Bitcoin percentage of supply in profit bottoms, where more than half the holders are underwater from where they entered Bitcoin. Right now, again, it is 74%. Bitcoin just went down to about 62%. So it's already getting closer to that milestone. But what you'll notice is that when the highs are in, there does tend to be a deeper drop by the percentage of Bitcoin in loss and profit, right? There's a larger drop, and then there's sort of this counter trend rally back up, and then it tends to continue down.
What this is a hidden bullish divergence. So what does this mean? I want to teach you all a signal right now that every one of you can utilize. And if you're on X, you should have this and you should already be diving in. Dive into Grok. Say, hey, Grok, what does a 1.5 year long hidden bullish divergence mean? Okay, well, what do we say? And also, I just want to point out, it's not just a 1 month hidden bullish divergence, because if you come here on the weekly, I like to get a confluence of different signals. We also see this MACD, the moving average convergence divergences, sharply moving back towards, you can also see it in the histogram, coming back towards the momentum, back towards the zero line, this is what we'd like to see, the swing back up, with setting up. We already see it on the 3-day chart. Look at this beautiful movement. But the point here is on the monthly chart, we see that massive hidden bullish divergence. You also see it here on the weekly, but on the MACD on the weekly, you see essentially the MACD also showing that swing in momentum back to the upside. So what does the combination of these two signals and the price action and where we're at, and we're scared and we don't know what to do? That's why you look to the data. And what does the data say? Well, let's just ask that question.
So, did you enjoy the zap? Let me know in the comments.